If you own a rental property and you're not giving your accountant every single thing that I'm listing to you in this video, you likely are going to run into a problem with your tax return. Hey, my name's Matt, and for those of you that don't know, I'm a CPA and I run a firm called TrueBooks that specializes in tax and accounting for real estate investors. I myself am a real estate investor, so I know and can be in your shoes as to what it is that I'm talking about, because I also need these same things to do my own tax return. And I see it day in and day out of people making these mistakes, which further delays their tax return filing, which causes penalties and a ton of headache down the road. So I'm here to share these things with you so that you can be prepared when you go to work with your CPA. Why is any of this important? Well, the first reason is in tax preparation, doing your actual tax returns, there's a ton of information going back and forth between you and your accountant or you and your tax preparer. And the more you can give your tax preparer up front, the better, because then the list that comes back to you for things that they still need is shorter. And the more that you give them, the further along they can get in your tax return process. I've been doing this for many years now, and so trust me when I say, if you can give your accountant more information up front, the better off you and the accountant are going to be. Not only is it going to save you a ton of time and headache, but it's also going to save you some money too, because if you're late in filing your tax return, you could likely incur penalties and fees. And not to mention, if you're a client of our firm and you come to us with messy accounting, we potentially will have to charge you more to clean it up for you. So it's going to save you all around. All right, so let's dive into it. The first thing you need to keep in mind when it comes to running a rental property is you are basically running a mini business. So keep in mind that even though this list seems pretty long and comprehensive, you're running an actual business to that extent. And so when it comes to your tax return, there's a lot of information that we need to file this correctly on behalf of you. First one's pretty simple. The first thing we're going to need is the settlement statement, the actual closing disclosure that you have from buying the property. I don't care if you bought the property 3 years ago or 3 months ago, make sure that you keep a copy of that and forward that over to your accountant. This is going to give us some general basic details of the property, such as purchase price, closing costs, insurance, taxes, where the property is and the address, who actually is on title, and things like that. Very important document to have. Now, I would say you need to send us the address, but you'll notice that if you give us the closing disclosure or settlement statement, we don't really need that because it's already going to be on that piece of paper. Next, we need to know the type of property. This isn't bad for you to confirm with us because most of the time we can tell from the closing disclosure or looking it up online once we have that document. But again, not bad for you to let us know again what type of property you're buying or have bought. So a real quick rundown of the types of properties. You have single family residence, multifamily residence, vacation / short-term rental, very popular now. 4 is commercial property. Then we have land, royalties, self-rental, and other. And you'll notice here, this is the same tax form where you would report royalty payments to you. But for this video, we're specifically talking about rental properties. Next, we need to know the ownership percentage. You may only own 25 or 50% of a property. So it's very important that, again, you let us know what your ownership in the property is, because sometimes we can't tell via the other documents that you send us. Next is going to be the date placed in service. Very important that you let us know when the property was available for rent and placed into service. So this is when the property is done being rehabbed and you have it furnished and you've now listed it for rent. Next is going to be days available for rent. And so this has a little definition behind it that I'll read to you. This is directly from the instructions of the actual tax form. For each property listed on line 1A, report the number of days in the year each property was rented at fair rental value and the number of days of personal use. So you'll see that it's very important that you at least give us the amount of days that the property has been rented. And as you heard, next is going to be personal use days. So let's go over what those are. So this is directly from the IRS's instructions. A day of personal use is any day or part of a day that the unit was used by you for personal purposes, such as an Airbnb that you brought your family to and maybe stayed at. Next is going to be any other person for personal purposes if that person owns part of the unit, unless rented to that person under a shared equity financing agreement. So you'll notice there that any person close to you that maybe uses it for personal reasons, also considered a personal use day. Next is anyone in your family or in the family of someone else who owns part of the unit, unless the unit is rented at a fair rental price to that person as his or her main home. So you'll see again, anybody using this property for personal use where it's not rented at fair market value, considered a personal use day. Next is anyone who pays less than a fair rental price for the unit, or anyone under an agreement that lets you use some other unit. So you'll notice even if you have a property where it's being rented for dramatically less than what fair market value is, those could still be considered personal use days, and you wouldn't be able to take deductions for personal use days. So remember, this is the logic behind why the IRS wants to know this. You're not going to be able to write off your mortgage interest for that month if it was used personally that month. Make sense? Next is my favorite piece, which is the P&L, the profit and loss. And the reason this is my favorite piece is not only because the nerd accountant in me really cares about this, is I want to scream from the mountaintops on how important it is that you keep these numbers accurate and in order throughout the year, because come tax time, your accountants are going to come asking for them. And if you don't have it, it's going to push back all of the work, and all the problems that we talked about at the beginning of the video are going to arise. What I need you to keep in mind when it comes to a profit and loss, which I'll throw a screenshot up here, and we'll even throw one in the description as a free resource, we have them that we give to clients, is we need it to be in a categorical fashion. I don't need to see your box of receipts or your accounting ledgers. I just need to see, for starters, categorical income, all your rents that you have received, for example, on one line item. And then I need to see all of your expenses, your commissions, your advertising, your cleaning costs, your HOA fees, things that are categorical. So you're not showing me individual transactions, but you're showing me all the money you've received, all the categories of expenses, and then ultimately what your net income is. Now, some of you are going to buy properties where you have large capital expenditures, such as a new roof, new flooring, and you've rehabbed the property. In the event that you do that, I need you to pull on a separate spreadsheet the data for those transactions and put them in this order. I need 3 pieces of data, or your accountant will at least need 3 pieces of data. I need to know the date in which you bought it. I need to know a description of what it is, and I need to know the amount. This is because, for my fellow real estate investors, bonus depreciation or depreciation of its own. We need to know how to calculate depreciation on these assets. How are we going to know how to calculate that? I need to know when it was placed in service, so that's the when, and I need to know how much it costs and what it is. So if you tell me that on May 1st, you bought 10 grand of flooring and got it installed on that day, and that was flooring, that's going to help me determine how to depreciate that on your tax return. Now, a quick rule of thumb, when to start putting these capital expenditure items on a separate spreadsheet. For example, if you have a small toilet replacement and it cost $150, you would put that directly on your P&L as a repair and maintenance line item. You would put that in that number, right? That would be baked into your small handyman sort of cleanup issues throughout the year. But when something large comes up, typically greater than $2,500, $5,000 remodel, $10,000 flooring job, $20,000 roof job, you would put this on a separate spreadsheet and keep track of those larger items, because one, we have to handle them differently on the tax return because we're going to depreciate them. Those aren't things that you can directly expense technically. And last, everybody likes to talk about the vehicles that they use within their rental property, and that's fine. I need you to keep track of 2 numbers when it comes to your vehicles. I need you to keep track of the total miles on your vehicle, total miles that you drove in that year, and I need to know how many business miles you drove with that vehicle in relation to that rental property. It's going to allow me to know how much, if any, I can depreciate from that vehicle, or it's going to let me know what mileage deduction I can take for using that vehicle. Obviously, we want to weigh the two and take whichever is larger. Now, you'll see there's quite a few things here in this video that you're going to need to give your accountant when it comes to owning rental properties. But this is it. This is the big leagues. You own a business, essentially. You own a rental property, and it's very important that we report this correctly on your tax return for benefit of you. If you give us this information in a clear manner, the discussions that we have now are not, hey, Zach, I need this stuff. It's more so, hey, Zach, I noticed that expenses look a little bit low here. Are you sure you didn't have anything? So that we make sure to drive down your net income so that everything that we need is there and you've accounted for everything. And we can be there as more of an advisor to you instead of really hounding you for things that we needed up front. So again, as a real estate investor myself, I keep these same kind of documents. No status. Anybody that owns rental properties is ultimately going to need to keep this information. They maybe just have an assistant or a team member help them with it. So if you need help and you're bad at keeping documents, try and use a template like we'll give you in this video. Try and hire somebody, maybe a VA, to keep these things in order for you. But if you leave with one thing, make sure that you are doing your bookkeeping so that at the end of the year, you can give your accountant a categorical P&L. It's the most important piece to all of this. And as always, my name's Matt. As I said, I'm a real estate investor myself. I run a firm that focuses on real estate and helps real estate investors with their taxes, tax planning, tax preparation, and things like that. And as always, my goal with this video is to show you sort of the insights of what I need or tax preparers need to keep clients in the know and steer clear of paying any unnecessary tax. So as always, if you have any other topics or anything that you want me to touch on, feel free to leave them in the comment section below, and I'll see you on the next one.